Good evening, traders, and welcome back to yet another backtesting video. Hopefully you guys aren't sick of them yet, but we are back with another one, and this time we are backtesting August. So we're going to jump right into it, and as you see, we are doing quite nicely. I'll quickly pop up the edge wonk, as you can see here. Current results, 4 months in, we are sitting at around 23%, 24% profit on the account. So if you see here, the peak 23.37% profit. Very, very nice. This month, hopefully can continue this positive momentum that we have currently seen. So we're going to jump right into it with the first trade. Okay, let's see what we can do. Trading the plan just as normal. We're going to short the position here, stop loss above that second high, take profit down here, place order, there we go. Okay, didn't start too well, started with a loss. It's never really what you want to see, but that's life. This one is news, as you can see here. You can see the news, it's non-farm payroll, NFP, no trades. So we'll go on to the next day. It's just as simple as that. If there's news, there's no point really trading. So on to the next day here. There we go. Target a 1 to 2. Place order. And play price on. This better go to TP now. This type of trade is brutal because when you're actually trading, you will probably close a 0.1 pip. But for backtesting purposes, I can't count it. Obviously, that has to be a loss. And it's tough, but it happens. And we can't take it back now. So I know a lot of people would be changing their spreadsheets and say, oh, I would have closed that. But we're trading with these conditions, so we're going to trade it as FX Replay says to us, obviously. Okay, so broken the previous structure here. We are selling. Stop loss above there. 1 to 2 risk to reward. Place order. There we go. Very rough start so far. It's never really what you want to see. So let's see what happens on this one. Okay, break to the upside. We're at 230 now. So I obviously trade this strategy up until 3:30, so it's kind of a 2-hour trading window that will enter the trades in. But I hold, latest time I'll hold is 7:30 p.m. So when that actually happens, if I'm in a trade and it goes to 7:30, whether it's in profit, whether it's at a loss, it doesn't matter. I will close that position. And the reason behind this is you don't want to be holding through the spread hour. You don't want to get swaps. It just adds or removes profit from your trade depending on obviously how you're trading. And there's not really any reason to, especially when we're trading in such a small window. I don't want to be holding overnight. So that's the main reason why I chose 7:30. It's kind of like a time in the evening where the volume does die down, especially in the UK. UK trading times, so I don't want to be holding my positions. See what I've actually noticed with this strategy, and as you can see here, you'll have a few wins in a row which obviously wipe out a losing streak. But we have a losing streak, then wins. We then have a losing streak. That one was a big losing streak. I think it's like 11% or something, or 10%. Then a winning streak, then another losing streak. But the good thing about it is the winning streaks wipe out the losing streaks by quite a lot. This one's obviously news here, so we're not going to take this. Especially certain months. So if I could just quickly show you this here, monthly reports. You see 15k, which is 15% return if we're doing it based on the 100k. This one break even, winning, winning, winning. So although all of these months have had those big losing streaks, we're ending a break even or in profit, and we obviously have this month here that was heavy profit. So, this month losing more than we won, This month losing more than we won. This month exactly the same. So we, out of the 5 months, 4 of them lost more trades than I won. So the losing streaks are inevitable, but we're obviously going to look for ways to reduce the size of the losing streaks. Okay, so here, CPI, no trades, on to the next. Jesus. Retail sales, definitely don't want to be trading that one. Again, you know, there's so much volatility. If you even just see this, there's not even any news at this time. But we'll see what happens. Okay, price technically broke structure here, so I guess we have to take it. It's the annoying thing about trading, you know, mechanical trading style. If price break structure, you had to enter. That's just the way it goes. Okay, TP hit, finally. Finally TP hit. And obviously there's news in a second after this one anyway. Yeah, and it melted down. So we got a nice 1 to 2 before the news, which is always a great feeling. It's always great. The worst case scenario is when you're in a trade, news hits, and then you lose. It's definitely the worst feeling. Stop loss above here. Targeting a 1 to 2. 1 to 2. See if we can get a nice melt. Oh, go on, go on. Didn't want to break structure to the downside. Very unfortunate. And it will seem like I'm kind of rushing through these trades, but I just want to get an overall idea, taking the exact same trades every single month for at least 12 months, to then see if it's worth me then focusing on trading and testing, you know, 3 to 5 years worth of data with different market conditions that's completely random. And obviously I can try to perfect it. Obviously you can never get a perfect strategy, but trying to improve it, trying to reduce my drawdowns, doing a lot of number crunching basically. But obviously in this series I'm showing you the basics of how I will test a strategy from the start. So this one's actually a continuation. So right now what I'm doing is I've picked a few confluences, like I said in the first episode, and it's a quick loss, and then I just went with that and then trade based on those confluences. This one's not actually broken any structure. Okay, now we've actually broken the structure. So pick the confluences that you have kind of seen work in the markets based on your experience. You see something happen a few times and realize, oh, I think I've seen that happen before. Test it. You know, you might as well test it. You might find something that works perfectly for you, and you see it happen a lot because it does happen a lot, and you can obviously make money from this. Even if it's a strategy that adds an extra 5% a year or 10% a year to your trading, if you can do that multiple times, then it all adds up, and you can basically have a really, really good portfolio of different trading strategies. People often think you only have to trade one style, but this definitely is not the case. The way I explain to people is, you think of a hedge fund. Do they just have one trader? No. Do they just have one strategy? No. They have a multitude of different traders, different strategies, all executing different ways. And the way this makes a lot of profit is because if one trader loses and another one wins, you're technically still in profit. So you can make money even when people are losing. And if you're having strategies that are losing, but you have other ones that are winning, that eliminate the losses basically, then it's kind of a win-win. It's kind of a win-win situation. But you need to make sure that you can manage them. There's no point trying to add 10 different strategies if adding that 10th one then sacrifices profit from the other ones because you then have split focus. That's not what you want. Okay, this one's actually consolidating a lot, but it hit TP, so that's fine. And like this one, I don't trade in New York at the moment. I don't trade at past 12 p.m. So if I'm trading a strategy that's 1 p.m, 1:30 p.m. onwards, I'm not doing anything at that time anyway. So it doesn't take anything away from my other trading strategies. It will just basically add something on. And if it does well, obviously this month isn't great, but if it does well, then it does well. We can add it basically once it does meet my criteria. Okay, this one, Melter. This month hasn't been as good as the previous months. From what I've been noticing so far, just looking down at the balance too. Hasn't been great. But the previous month was 15% profit. So that is very, very good. So I think I think that might have been September actually that I took that trade. Maybe, I don't know. But we can go on it here on the data. We can export it and then we can import it. So I didn't show you all my files. I can import it into Edgewonk, save and upload, and then we'll be able to see the overall data. Obviously I could just show you on FX Replay, but as I said in previous videos, I've done it on different sessions at the start, which wasn't a great decision by me, but now I can obviously show you the accumulation. So you can see here that this month was basically, it was a losing month, but not that bad. It actually wasn't that bad. I was expecting it to be worse. We did lose 3%, but based on the previous winning month, 3% isn't actually that bad. Very low win rate, 4 wins, 12 losses. And as you can see here, we went from this point here to this point down here. So it's basically sideways. The good thing is about a month like this, it wasn't sharp drawdown. So it wasn't like this where we have massive losses in a row. We obviously had a few losses here. There was, I think, around 5%. Then we had a win and we kind of consolidated and never really plummeted. Obviously, that you could say this was a plummet, 5 losses in a row. This is something I need to fix. But it shows a positive sign that we're obviously going up the whole time, and we will have these like plateaus, or you could call them like lulls or something. It depends how you put it. But it's not just one straight line that's going to the moon. Obviously, this is only, I think, 6 months of data. Yeah, 1, 2, 3, 6 months of data. So it's very, very small at the moment. Obviously, we have a big sample size because of the amount of trades per month. But if we're looking back here, you can see per week. So we're having some weeks 5 trades. And if you keep looking back, there's a lot of volume. We have some really good weeks, and we also have some really bad weeks. And this is what you have to kind of accept when you are trading. You're going to have really good months like this where every single week is profitable. Then you're going to have months like this. It's not like that. And if you can't execute effectively after having, let's say, 3 losing months in a row to then execute and win, then you're going to have trouble trading. And that's just how trading works. So at the moment, the strategy is looking okay. 6 months, can't base a strategy off 6 months of data, which I want to emphasize, but it's looking good. And I just want to show you that it's so simple. Trading doesn't have to be complicated. You don't need 15 different time frames. You don't need 10 different pairs that have to correlate. You don't need that. And hopefully by building a strategy, and then if it does work, I will take it live and share live results with you too. Maybe a live trading series, or from 1:30 to 3:30, I might do a live trading session if that guy is something you guys are interested in. But that's the whole kind of thing I'm going with here. From zero, writing the plan on Notepad, to taking a strategy live and making profits. Maybe passing a prop firm challenge, maybe just building a long-term track record with this account. That is the goal. I'm not trying to make trading seem super complicated to you. I don't want that. You don't want that. And I don't want you to think that's how trading is. I want you to realize that trading can be super, super simple as long as you make it simple. If you overcomplicate it, look for the holy grail, constantly trying new things and not focusing and doubling down on one thing, then you might not be as successful as someone who picks one simple thing and just tries improving that simple thing instead of hopping onto different strategies every week. So another month done. Subscribe so you don't miss out on the next episode dropping, and I'll catch you guys next time.